We are excited to welcome you to our first Northwoods Financial Series session of the year. The Northwoods Financial Series is a new series we're launching at the credit union. Each month, we are hosting a free educational session. My name is Lisa Kramer. I'm a member of the Park City marketing team, and I will be your moderator. And I'm excited to introduce to you our presenter, Luke Pelger.
Thank you, Lisa.
Luke. Yeah, and let me give you a little introduction here, Luke. Luke is a partner experience manager with GreenPath Financial Wellness. GreenPath is a nonprofit organization with the mission to empower people to lead financially healthy lives. Since 2006, Luke has educated people on the topics of budgeting, credit reports, and managing debt. So welcome, Luke, and I really should say welcome back. Luke presented during our Northwoods Financial Summit last fall, and we are glad to have you back kicking off our Northwoods Financial Series.
Yeah, I appreciate it. Thank you so much, and very excited to be part of these series. As something I've found in the years that I've been providing financial education to consumers is it's good to have a reminder, right? Have a reminder, have some encouragement about the journey that we're on when it comes to financial wellness and all the things that we have to handle financially in our lives. So the topic today of how to be financially fit in 2021 is a great topic to kick off the series because it'll give us kind of a baseline, a starting point as far as, what are some of the basics we'd want to start to evaluate or think about when it comes to our personal finances. So we'll walk through some of the various steps of financial fitness and what we should be focusing on, questions we should be asking, things we should maybe be fine-tuning in our situation, because financial fitness is something that's ongoing. It's not something we do once and we're done with. It's not a one-time activity. It's an ongoing thing, just like our physical fitness and mental health and mental fitness. It's something that we should constantly be working on. This is a great checkpoint to take a look at that and evaluate as we move forward in the beginning of the year and maybe set a little bit of a plan with our financial fitness. Before we jump into the specifics itself, just to give you a quick history of GreenPath, or overview of GreenPath, I should say. We're a nonprofit organization, and our mission is empowering people to lead financially healthy lives. So we're partnered with the credit union to be a resource for members of the credit union to help with some of these day-to-day personal finance questions. So we have certified financial wellness experts that can provide financial assessments, housing counseling, talk about options for handling debt. So you as a member can take advantage of what we provide here at GreenPath because of our partnership with the credit union. So we do thank Park City for supporting us so that all of you can take advantage of our services here. And as we jump into the topic today, I want to define what it is to be financially fit, or what it means to have financial wellness. Because when we hear this term, many people think different things, and that's okay. We all have kind of a general idea of what financial wellness or what financial fitness might be, whether it's not having any stress or being debt-free or just kind of having a plan or having money saved for a rainy day. Those are all components of financial fitness for certain, but let me give you a definition that helps us really kind of set a really direct target of what we're trying to accomplish when we talk about financial fitness. And I'm going to use a definition from the Consumer Financial Protection Bureau as our definition or our goal of what financial fitness should be for us. So number one, financial fitness is feeling in control of your day-to-day finances, not just having a budget on paper, not just having a general idea of what's going on, but do you feel in control of what's happening? Do you feel like you can actually have some impact of what's happening in your overall situation? Secondly, having the capacity to absorb financial shock. So when the unexpected occurs, are we able to respond to that and overcome that? Number three, being able to meet financial goals. Not everyone feels like if they actually set a goal and follow through on the steps that they'll be able to accomplish it. But when we're financially fit, we should feel like we're able to do that. And then number four, having the flexibility to make choices. So if there's a want as opposed to a need in our financial situation, do we have the flexibility to actually have that want or get that want in our situation, or just decide between different things financially overall? So these are the four components of financial wellness or financial fitness. And at times we feel like we may have one of these or two or three, sometimes all four. Sometimes we fluctuate between how we feel about our overall financial fitness or wellness. And that's okay. What we want to keep in mind, though, is we're striving for financial wellness and financial fitness. And sometimes it's life stages that change or circumstances that may impact how we feel. But overall, if we're doing the right things right, we at least should be moving in a general direction of feeling more financially fit than not, all else being equal. So I like to kind of just set this baseline of, hey, what we're looking to do is we want to feel in control, have some capacity to absorb shock, feel like we're able to meet our goals, have some flexibility, and the steps we cover today are the steps we should be taking to help move in that particular direction. And so the steps in the journey really revolve around how we spend and save money, how we budget and track expenses, how we manage and pay down debt, and then most importantly, just like other types of fitness, you're repeating the steps over and over, right? So we're just constantly moving in the direction that we want to go. And so the repeating of that steps is really the consistency that we want to get. Once we get these steps down, it's then just consistency of repeating the steps over time. And so let's walk through 5 different steps in how to be financially fit in 2021. And we'll start with the first step, which I like to say is take stock of your situation. Where are you right now in your situation? And the way I like to accomplish that is just by asking some questions. I'll throw out a few questions here as examples, and you can find out or ask yourself your own questions or evaluate a little bit differently on how you want to take stock. But some questions you could consider. How do I feel about my financial fitness right now? Do I feel pretty confident? Do I feel stressed out? Are there things keeping me up at night? You can start to think about, how do you work with your personal finance? Is it just you that's managing all the money? If you're married or have a spouse or a partner or have a family with kids, who's managing the money? Who's making the decisions? How are you making purchases? Are you using cash, a credit card, a debit card? How do you track that spending over time? A lot of questions could be asked here, but if you just start to think through a couple of those questions, that'll at least highlight for you maybe a few areas of where you see yourself right now in your situation, or maybe even highlight some needs that you'd want to take a closer look at. So just try and figure out where you are right now. In general, that can be just an emotional response. How do I feel? I feel pretty confident, or I feel somewhat confident, or not confident at all. That may be an indication of where you want to focus your energy moving forward. A more specific approach in taking stock is going through a checklist. So I'm going to give us all a financial fitness checklist here just to help you evaluate very quickly in a matter of a minute or less, what are some things that I could be focusing on, or what am I doing well with my particular situation as we move forward. So I'm going to give us this financial fitness checklist here. I'm going to read 5 statements on the checklist. When I read the statement, think to yourself, do I do this all the time, sometimes, or never? Okay, again, so I read the statement. Do I do this all the time, sometimes, or never? Here we go. Number 1, I pay the rent or mortgage and utility bills on time. Are we doing this all the time, sometimes, or never? Number 2, I plan ahead for periodic expenses such as taxes and insurance. Number 3, I set goals and budget for my net income. Number 4, I check all 3 of my credit reports every year. Operative word there, all 3 credit reports every year. And then number 5, I save a portion of my income every month. So as we read through these 5 statements, again, are you thinking to yourself, do I do this all the time, sometimes, never? As you're thinking about those, maybe it's highlighting something in your situation that you need to take a closer look at. And that's one of the intended purposes of this checklist, to immediately identify, hey, some of these periodic expenses, sometimes they come and I don't expect them, right? And so I kind of have to figure out how to respond to that insurance bill or that tax bill that comes up. Or, hey, I checked my credit report, but I don't always check all 3, so I don't quite know, if the information is correct on all 3 of those credit reports. This right away should tell you if there's something you want to focus on. So if it is identifying something for you, make a note of that right now as something that you want to take a closer look at, something you want to evaluate, and the steps that we talk about should address this a little bit. And then this checklist is also meant to illustrate that if it feels like it's difficult to manage your personal finances, you're not alone. These are just the basics of personal finance, right? We're not talking about evaluating the appropriate coverage as far as insurance, or where your money is invested and how much you're going to need when you retire, or saving for the kids' education. This is just day-to-day personal finances, right? And managing what's coming in and going out and kind of setting up a plan as you move forward. So if it feels difficult, it is for all of us. So don't feel alone. It's a common feeling, but we'll also give some tips on how to make it a little bit easier with managing these particular things. And I'll say for me, I've been teaching this for well over 10 years, and even I'm reminded I do plan ahead for periodic expenses, but every time I get that insurance bill, it kind of shocks me, right? When you see that big number that you have to pay. And so if you're planning ahead, it makes you feel a little bit better. Or for me, checking all 3 credit reports is a challenge. I usually check 1 or 2 every year, but I don't always get to all 3 every year. So it's not uncommon to have some challenges. The goal is, the question is not whether I want to improve something. Most of us feel like we want to improve something. The question is, what do we need to improve? And then what are the tools or the steps or the information to help us get there? That'll be my goal today, to help you with some of that. So with taking stock, just kind of evaluate where you are right now with a few questions. Hopefully that checklist gave us something to take a closer look at. Or if you're feeling very confident, that's good. That's a good outcome of the checklist too, to know, hey, you're on track, and that's good encouragement to continue with the things that you're doing. Step 2 is to set some goals. So first we take stock of our situation. Step 2 is going to help us start to look ahead and say, where do I want to go in my particular situation? We should all have some financial goals that we're setting and working on a regular basis. And so what I recommend when setting goals is to create a SMART goal. Because when we talk about financial goals, if I were to ask you what your financial goals are, you'll hear things like, pay off the mortgage, pay off some credit card debt, save for a vacation, save for retirement. Those are all important goals to have, but sometimes the information we need to see how we're doing with those goals is missing. So we got to take that goal of, let's take the example, I want to save money for a rainy day, or save for an emergency. I want to have more money for that so I sleep a little bit better at night. So let's take that goal and let's turn it into a SMART goal. So SMART is an acronym for, a goal should be specific, it should be measurable, it should be attainable and realistic, and it should be timely. So instead of saying, I want to save money for a rainy day or emergencies, a SMART goal would say, I want to have $2,000 saved up in an emergency fund for emergencies. I want to do that within the next 12 months. I have $1,000 saved right now. I need to save $1,000 over the next 12 months. So I need to be saving just over $80 a month to hit that particular goal. Notice the difference between the two goals of, I want to save more money, versus the SMART goal lays out the specifics of what you need to do each month. You can track the progress, measure that along the way. You can plug the number that you need to save into your budget to see if it's attainable or realistic. And then you've got a time frame that says, hey, by this time next year, I should be there. And if I'm not, I can be evaluating along the way to see where I need to make some course correction. So SMART goals really help nail down the actions you should be taking and the evaluating that can take place as you're working towards that goal. So whether it's a short-term goal or a long-term goal, it's all the same process. Make sure you do set some SMART goals so that you can see how you're doing with progress along the way. Another way to set goals, there's kind of a second approach that I sometimes recommend. Not everything needs to be a SMART goal, but set a goal that creates the right action or the right habit for what you want to accomplish. And one of the things my wife and I do, especially when it comes to saving for a rainy day, we've got a little bit of money saved, but we want to always be saving more for emergencies, because you can never quite know what might come. No one ever really feels like they've saved enough money, right? We always feel like we should be saving more. So what we're doing, we don't have a specific SMART goal when it comes to our emergency savings, but we're creating the right action and habit to help us get there. And so this is an example of what you could do in this case. Set the goal of, I'm going to save $50 in my emergency fund every month, because you're going to be saving a lot for an emergency fund over time, and it's kind of an ongoing thing that we always want to be working on. So we set the habit or the action that's going to help us get closer to that goal over time. So saving money every month, just to have an amount in there in our budget to make sure it's happening. There's no end date to that, but it's just happening consistently. That action is going to make sure it's accomplishing the goal over time. So that can be a second way to set goals, creating the habit or the action to move you forward with it. So take stock of your situation, set some goals. Why are we setting some goals? Because that's going to give us clarity. It's going to give us a filter through which to make decisions, because there may come a day when I want to, purchase something that I want rather than I need. And I can ask the question, is it going to help me with that emergency fund? Is it going to help me with paying down that debt, or will it take that money away from that goal? Or if it's not going to take away from that goal, then yes, I can afford that. But if it does take away from the goal, you might have to say, hey, maybe I should make a different decision here. It's going to give you the opportunity to start asking those questions and having that awareness as you move forward. So notice some of the work we've been doing. We haven't even started talking about the numbers in a budget yet. Sometimes it's setting the foundation that's the most important thing, of just understanding where you are, understanding where you want to go, and then building upon that foundation with the budget that you do have, which moves us into step 3, which is actually building the budget. This is a key thing that all of us should have and all of us should be doing on a regular basis. Building a budget, tracking our spending, making sure that our budget supports the goals that we have. So a budget or a spending plan is a key component in your financial fitness that you really want to get good at managing. So first thing we need to do, if we've never done this before, is build the budget by determining the income that we have in our situation. And this is something that's pretty consistent, so it doesn't change often, but when it does change, you adjust your budget appropriately. But we just determine the income by seeing how much money is coming in, and this is typically the easiest step. We all look forward to payday. We all look forward to the direct deposit hitting our accounts. We all kind of know what those numbers are. But just for your household, however you're managing that budget, determine what's the paycheck amount, the pension amount, the Social Security amount. What's the amount that's coming in, and use the net amount, the amount that you get after taxes or other deductions are taken out. What's the net amount that you get to use each month to manage the household expenses that you do have? So determine your income, make sure you have all that listed out. And then next, build out your budget with the expenses. And there are different types of expenses to take a look at here. So you need to list out all the money that you're typically spending money on each month. So different types of expenses you need to evaluate. First are your fixed expenses, things that are there every month. It's the same amount of money every month, so you can just plug those right into your budget. So fixed expenses are the mortgage, the rent, the car payment, the student loan. It's not changing. It's going to be there for a while, so plug those right in. Second are the variable expenses. These are expenses that are there all the time, but they're going to fluctuate a little bit. So whether it's food, gasoline, utilities. And what we need to do here is just average out, or take the average of what these expenses typically are. So for utilities, you could get on budget billing so that you have the same amount every month, which makes that easy to manage. For things like food, gasoline, transportation, those sorts of things in general, it can fluctuate a bit, but just use an average of what you typically spend. And the way that we would do this at GreenPath is, when we're taking someone through a budget, is we would just say something like, hey, how often do you go to the grocery store? Well, I go about once a week. How much do you typically spend? It's about $100. So is it safe to say you spend about $400 a month for food? Yeah. So that's a good starting point, right? Just kind of figuring out what are your rhythms of spending, how much do you typically spend. That can be a good starting point. And then over time, track that amount, track that spending as you go along to see if it's close, and adjust your budget accordingly. So you should have pretty consistent, at least, expenses there, although they may fluctuate a little bit. And then periodic expenses, again, are the things like taxes and insurance. What do you do there? Well, if you pay the car insurance every 6 months, if it's $600 every 6 months, you need to budget $100 a month so that you're setting that money aside, so when the bill comes due, you can pay for that. So average those out per month, make sure you have them as expense items in the budget, and then put that money, maybe even if necessary, into a special savings account so that when the bill comes due, those dollars have already been budgeted for and set aside for that. So make sure you're taking a look at those, and then list out all your debts. You need to know the minimum payments on all the debts, whether it's credit cards or personal loans or other items. Make sure that you're accounting for those and how those are impacting the overall spending each month within the budget. So expenses are a little more challenging, but if you just take a look at the numbers or start tracking things, or take a look at your statement from your checking account or from your credit card, that'll be able to kind of show you a consistency of what's happening there in those expenses. And so list all that out and track that over time. And this is a budget example that I'm going to come back to a little bit later, but just notice how simple it is. Let's say, income for your household is, $3,500. Well, this budget here is $3,500 of expenses. So we can compare what's my income, I list out all my expenses, and we can compare those two items. So understand just what's coming in, understand what you have to pay for regularly at the end of each month, and you can see that very, very simply, very easily in your budget. All you're doing when it comes to budgeting is setting a plan for your budget, right? You're just telling your dollars where to go or what you're going to do with your dollars over the course of a month. And so we'll come back to that budget example in just a minute to show some simple ways to manage the budget. Step 3 is to actually balance the budget, right? So balance the income and expenses. So find out, again, how much your income is, compare it to that list of expenses that you have, and see what it looks like. Is there a surplus? Is there more income than you have expenses? If so, put the extra income to use. Don't let those extra dollars get lost. Put that money to use so that you can account for that and get the most out of those extra dollars. And it could be use those extra dollars to pay down debt, use those extra dollars to save, use those extra dollars to have a little fun. It's okay, it doesn't matter. Just make sure you have a plan for that and it matches the goals that you have. Next, you could have a deficit, more expenses than income, and if so, we need to figure out how to make the necessary changes to balance the budget. So if there is a deficit, 2 options are either increase income or reduce expenses. That's pretty straightforward. What do you do though with that? There's a lot to look at if you have to balance your budget. One of the simplest things I recommend for people is to evaluate your costly C's in your budget. And so these are expense items in your budget that start with the letter C. Sometimes they're needs, sometimes they're wants, sometimes they're big things, sometimes they're little things. Sometimes you have control over them, sometimes you don't. But a lot of things that we spend money on start with the letter C, and this can be an easy way just to evaluate, where's my spending going? Can I make any adjustments? So let me give you some examples of costly C's. I'll list them out here for you. So they are coffee, cell phone, cable, car, carryout, cigarettes, clothes, children again, because they're that expensive, and cinema, right? So a lot of things we could be spending money on. And it could just be, spontaneous purchases here and there, things in the moment that we just kind of purchase on the fly. If we look a little bit more closely, if we're a little more intentional, sometimes we can find ways to save money in these costly C's and save quite a bit over the course of a month or a year if we're smart about it. So let me give you an example of just one of the costly C's that I just listed out. So we'll go with carryout. Let's say someone spends $750 on a meal, whether it's lunch or dinner or just a random meal here and there. They do it 5 times a week. If we pretend there's 4 weeks in a month, just for simplicity, that's $150 a month. That's $1,800 over the course of a year. Now, most people think if I need to cut my spending, I need to cut it out altogether. I can't spend that money. I can't afford to do it, so let me eliminate it altogether. If you can, sometimes that's appropriate, but sometimes an easier approach is let's just scale it back a little bit and see what the impact could be when it comes to trimming things. So instead of 5 days a week, what if someone just said, hey, I'm gonna pull back and do it 3 days a week? So $750 a day is $2,250 for 3 times a week, $90 in a 4-week month. That's $1,080 over the course of the year. Just pulling back 2 days a week saves this person $720 over the course of a year. So what if we trimmed that costly C, and then we called our cable company and we're able to trim $20 off of that bill? That's $240 over the course of a year. Well, now we're talking close to $1,000 to use for other goals, to save, to pay down debt, to have a little fun with. Trimming a little bit can make a big difference overall. Sometimes it's not how much we make that impacts our ability to meet our goals, but sometimes it's how much we spend in the situation. So looking at spending can be a very easy way to make a big change to your budget and the goals that you have. Again, sometimes we do need to increase the income. We're not going to overlook that. But looking at the expenses can be a very quick, easy way to balance our budget if we need to do that. So make the necessary changes to balance the budget, and then find a tool to manage the budget. And this can be very preference-based. It just depends on what works best for you and the way that you manage particular things. You could use pencil and paper, or even something like a simple budget worksheet, which is something that's available for free on GreenPath's website, just to list out expenses, write them down in a list, and just keep track of them with paper and pencil. Very simple, very easy to use. You could use a spreadsheet. Use the spreadsheet to list out your categories, list out the amounts. It does the math for you if you know how to do the formulas on there. And that can be your budget that you're tracking things on. You could use online banking. There are tools that help you evaluate your spending, look at things a little bit differently. So any features in an online banking platform could be a great way just to see where the spending is occurring, or any analysis on the categories of where you're spending those dollars. So see if there are any features with online banking and checking accounts for that. And there are also apps for phones or tablets, many that are free. Do know that if you use a free app for budgeting purposes, typically you're the product, not the free app, because they're trying to get your information to solicit to you and promote things to you. That's okay. Just know that you're signing up for that, for those free services. But there could be some good apps that you want to use. That's up to you if you want to use that technology. Moral of the story is just have a tool to track the spending, to compare it to your income, to know if you need to make any changes over the course of a month or over the course of a year. For me, I use pencil and paper for probably 4 or 5 years. I graduated to the spreadsheet, and that's still what I use today. And when it comes to evaluating my budget, it's really nothing is more difficult than just taking a look at the budget that's there, compare it to my spending. It takes about 10, 15 minutes every month. I know if I'm on track, or if I know I'm overspending, and I just kind of course correct along the way. If you do this enough, it just becomes habit and routine. You know what your numbers are, and when something's out of the norm, you're going to notice it right away. So it doesn't have to be very complicated. Just a quick analysis every 30 days just to see how you're doing with your spending is usually sufficient for where you're going. And then step 4 is to save. So we take stock of our situation, we set goals, we create our budget. And again, I'll come back to our budget to look at it in just a couple minutes. We also want to make sure that we're saving, and savings is a key component for all of us. Why? All of our financial goals require saving money, right? We're kind of buying our time back. We're buying our way to that goal by saving money. So first thing you need to do is pay yourself first. Create an expense category in the budget called savings. Make sure that you're paying yourself like you would a bill, right? So make it a priority, just like you would the utility bill in your situation. And for those savings, set up monies to be saved for emergencies or a rainy day, as well as save for future goals, things that you know you're going to have, and account for those so that it's not a surprise in the future. It's not an emergency in the future because you've already paid for it because you're expecting that it was coming. Let me give you an example of how I like to set up savings in my situation. I'm just using a generic number here, but this is a diagram of what my wife and I do when it comes to our savings. We have an amount of money at the end of each month that we're putting money towards. And so a portion goes into the emergency fund, right? What I mentioned before, just say $50 every month for emergency. That's just going to go on as long as we can afford to do so. We then put $50 aside every month for car maintenance. So for major maintenance like set of tires or a major repair that needs to occur, we're putting $50 aside, so $600 a year. So if we have that major repair, those dollars are already in there. And if we don't end up having to use that money, well, that just becomes part of a down payment for a car in the future, because we know we're going to have to replace a car in the future. So that's helping build up a little bit of a down payment there. We then have $50 for home maintenance, right? So this is for a repair on the home. That's obviously going to have those from time to time. and then $50 for what we call home upgrades. So if we want a new piece of furniture or a rug or something like that, some dollars are there. So we're just breaking these into little buckets, letting those dollars accumulate, but we're allowing that to be part of our budget, to be prioritized, so that when these things come, which we know they will come, we've already paid for some of it, or even sometimes all of it, because those dollars have been saved consistently going forward. So if you're able to save a little bit of money, look at the different goals that you have and set those dollars aside for those particular goals, because really emergencies should be things that we're already planning for. They shouldn't be emergencies. They should just be an expense that we've already prepaid if we've done enough work ahead of time to make that happen. It's not going to be perfect though, right? There's still going to be emergencies where you haven't saved at all, but you're at least going to feel a lot better if you have something there than nothing for that unexpected expense that does occur. So keep savings a priority in your budget. Financial fitness, one of the building blocks of financial fitness and feeling confident about where you are, it really does revolve around savings and feeling like you have a little bit of a cushion when something does happen. And then let's give a few steps about simplifying and automating this day-to-day management of the spending plan that you're creating here. First, from just a very practical standpoint, to eliminate clutter, things that you have to manage paperwork-wise or filing-wise, sign up for e-statements. It's real easy to do. Save those in a folder somewhere. It's a constant reminder when you get that statement in the email inbox of what those expenses are, and make sure that you have a copy of that. Second one, use one debit or credit card for purchases. And I'll explain the importance of this in just a moment. But if you use one debit or credit card, when you go to evaluate your spending, it's going to be a lot easier to see how much you spent over a period of time than if you had 2 or 3 credit cards, or if you use the debit card here and the credit card there. That can sometimes be a little bit confusing. Just using one or the other for most purchases helps just simplify, and also keeps it easier for you when it comes to making sure things are paid for. If you do use a credit card, just paying one card is easier than paying 2 or 3, or using the debit card makes it easier because it's just coming right out of the checking account. So just be smart about how you use those particular tools. Third, automate expenses where you can. So what are you able to automate? Typically it's a lot. We'll see that in just a minute, but automate it so that you don't have to remember to do it. That'll make life a lot easier. And then also automate your savings. Try and avoid you having to be the driver of your savings. One of the things I used to do in the past is I would manage everything myself over the course of a month. I'd have a little bit left over at the end of the month. I would actually take the $50 I had or the $100 I had, go to my credit union, and actually physically deposit those dollars in cash into my savings account. Well, how often do I have to do that? A couple times a month, 20, 30 times a year I was doing that. Well, what did that require? It required time, energy, intent to save those dollars. What if I just set up automatic savings of $50 every month or every week or every quarter, whatever it was, set it once and forget it, and it would do it automatically for me. Didn't have to think about it, didn't have to worry about it, but it was still taking place. That's so much easier. And I'll be honest and say, when I switched that and automated my savings, I saved a whole lot more than when compared to trying to control it myself. So if you can automate savings, that's really going to increase your ability to move forward. So let's come back to our budget example of how automating can really simplify what we're doing here. So these are all the expenses in the budget that we have here. And this, to be honest, is a very close reflection of what it looks like in my particular situation. So what if we could automate most of our expenses? Well, what would that look like? Mortgage, taken right out of the checking account every month. Utilities, put it on budget billing, get it paid automatically. Cell phone, you can set up automatic payments from an account. Same with cable and internet. Life insurance, again, just a pull from the checking account. Car insurance, same thing. Various savings goals, those are automated. I really only have 3 things that aren't automated. What are they? I like to call it food and Target, right? So we're buying our food, and then all the other household items are typically coming from Target. childcare, and that's just typically a check that's written when that's due, and then gasoline. So what do I need to keep a close eye on? I'm just keeping a close eye on two things, gasoline and then the day-to-day food and household items. What am I doing though for those items? I'm using one credit card to purchase all those items. So at the end of the month, all I have to do, I need to evaluate how I'm doing. When that payment comes due for the credit card, I look at the expenses, make sure everything matches, what I was really expecting with the spending, evaluate it, and then I just pay that bill. That's the one thing I don't automate, because it then forces me to actually just look at the numbers, right? So each month I'm just taking a close look at one credit card bill, pay the bill, and I know everything's covered in my particular budget. So if you've set up your system right, you should know over the course of a month, all the automated things, I know the numbers on those. All the other items, I'm tracking those with the card that I'm using or the payment system that I'm using, but it could be cash. Just use cash for the gas and the groceries. That'll be a finite number, each month. And then if you have enough income coming in, you're going to meet all your expenses over the course of a month. So that's just one way to kind of see how it can be a little bit easier to manage the day-to-day. And it's really setting up the budget itself that's going to help this system run a little bit easier as you move forward. And so the work of managing the day-to-day, it's nothing more than just using this system to help you get there. So everyone can do it a little bit differently. You don't have to follow my process here, but financial fitness allows you to get into that rhythm of what works best for you, have confidence that you're moving in the right direction with covering your day-to-day expenses, but then also meeting the goals that you have at the same time. And then step number 5 is manage debt. And we won't use this time to get into a discussion of values about debt. Is debt a good thing or is debt a bad thing? We all have different thoughts and values on that. If you do have debt though, if you do use debt to purchase things, just have a plan for the debt that you have and be proactive with it. A good question to ask is how much debt is too much, just to see what it means for you. Well, here's some indicators. If you're unsure of the amount, or translation, if you don't want to open the statement when it comes to you, that could be an indication there's too much debt. If you're only making minimum payments, if you're maxed out on lines of credit or credit cards, if you're receiving collection calls or letters, these are all clear indicators you want to take a closer look. Or, not listed here, if it just keeps you up at night or you're thinking about it consistently, those are indications too. You want to figure out a plan for addressing the debt. So look at those indicators and be proactive in addressing debt. And sometimes people want to immediately jump into, okay, what are my solutions for addressing debt? And that's good, but let's take a little bit of time again here to set the right foundation. So I recommend the first thing with managing debt is gather all the information that you can. Have your budget, know what your budget looks like. So when it comes to figuring out what solutions you might have available to you, your budget may indicate, what options are the best fit for you. So review your budget, make sure you know what's there first. Gather all the details for the debt. Who do you owe? How much do you owe? What's the current interest rate? What are the payments? Are you current on those accounts? Are you past due? Are you being assessed any fees on those accounts? Get all the details you can to see what value some of these solutions might be for your particular scenario, and then start working through some of these solutions. And I'm going to walk you through a spectrum of solutions from where you should start to where you could end up, and anywhere in between. These might be good solutions for your debt. The best solution that we know already is to pay more than the minimum payment if you can. That's an obvious thing, but what I like to illustrate here with paying more than the minimum is the financial impact this can have if you're able to do it. So as a good first step, always try to do this if you can to save as much money as you can in the process. So let's take an example of someone who spent $2,500 on a credit card with an 18% interest rate. If they pay the minimum payment of $62.50, they're going to pay 204 payments over the course of 17 years, and they're going to end up paying over $5,600 for that $2,500 charge on the credit card. So a lot of money. But what if you could pay just $50 more? So instead of $62.50, you pay $112.50. Well, instead of 204 payments, now it's only 28, and you're paying it off in just over 2 years. and paying just over $3,000 on that credit card? Or instead of just $50 extra, what if it's $100 extra? Only 18 payments, paid off in a year and a half, pay about $1,800 on that particular card. This logic applies to credit cards, loans, student loans, mortgage, right? So the faster you pay it, the more you pay on it, the less interest you're going to pay, and you're going to save some money in the process. So that's a good way to start. If you're able to do that, set up a plan to aggressively pay your debt and get the savings through that. Some other solutions you could consider, and this is where talking with the credit union is a great opportunity, where first you can talk about refinancing the loans or the mortgage that you have. Can I get a lower interest rate? Can I restructure this in a way that I would save money each month and pay less over time? There might be opportunities for that, especially if you took out the loan a long time ago. Interest rates have come down significantly. This could be a great opportunity to explore. Secondly, debt consolidation loan, right? Take multiple debts, put them into one consolidation loan. Maybe you get a very reasonable interest rate on that. It's going to save you money compared to the interest rates you were paying before. And you just have one payment to pay off that consolidation loan and address that debt. Could be a good solution. Or even balance transfers. If there's the opportunity to move money to a credit card at the credit union with a lower rate, maybe no fees, or take a look to see if there are any balance transfer fees. Maybe there's an opportunity to bring those balances over to an account at the credit union and use the savings on that card to pay it off more aggressively and pay less interest overall. In all these scenarios, your credit's going to come into play, so do know that. Talk with the credit union to see what those opportunities are, if there are any costs you should be considering or fees or rates, how do those compare? You still have to do a little bit of analysis here, right? See if it's a good fit, but maybe a good place to start to, address these debts, save money in the process while you're doing it. So those are all things you could do with the credit union. And then a fifth option now, based on the options we've looked at here, you could look at a debt management plan. And this is something we provide here at GreenPath as a nonprofit organization, where it's a plan accepted by creditors nationwide to help you continue to pay the debt, pay it in full, but get some help from the creditors. GreenPath would work with the creditors to get lower interest rates, stop the late and over limit fees on credit cards, re-age accounts that are past due, stop the collections activity on certain debts. So you'd continue to pay the debts, but get some help from the creditors because GreenPath is working on your behalf with those creditors. I will say debt management is not debt settlement. We're not the company on the radio that you hear. Do you have $10,000 in debt? Call us today. We'll help you eliminate your credit card debt. That's a completely different thing. Debt management helps someone pay their debts in full, but get help from the creditors in the process. And I'll give you an example of that in just a moment. Do know, though, that a debt management plan, there is a fee for the service. It is an ongoing service that could take 2, 3, even up to 5 years to pay off unsecured debt. So the fee is to help the maintenance of that plan over time. And the fee should be outweighed by the benefits of the plan. If you've never seen how this works, I'll just give you a quick example. This is a real-life debt management plan of someone we work with here at GreenPath, and they had 4 credit cards, high interest rates on the cards before they called GreenPath. They enrolled in the plan with us. We worked with their creditors, and these are the new interest rates on the credit cards. So instead of 24%, now it's down to 17. Instead of 29%, down to 9.9. So much more affordable rates. In some cases, not only do the rates come down, but the monthly payments can also come down significantly as well. So paying less on these accounts for the minimum monthly payment, paying less interest. So that's going to save a lot of money overall. For this individual, they're saving over $290 per month, almost $300. So even if someone's paying a fee, the benefits outweigh the cost, definitely, cash flow-wise each month. They're also going to pay off this debt 2 years sooner than if they didn't use the debt management plan. So it's a great solution. The downside, there's a cost to it. The cards on this account have to be closed. They can't be used anymore. But long-term, they're paying the debt on time. They're paying the debt in full. It's helping improve their credit long-term. So it could be an option to consider. If all those other options didn't fit, Maybe a debt management plan is the next step in that journey. So for yourself or for others, do know that there are good solutions beyond just the traditional things you may have already tried. And this is one of the reasons Park City partners with GreenPath, is we have an additional solution to add to the spectrum as you're exploring those things. So work through the list here. Work to pay more than the minimum on your own if you can, refinance or get a consolidation loan or look at balance transfers. If none of those things work or fit or are reasonable, maybe a debt management plan is a good fit there. Again, the moral of the story here with managing debt: be proactive, have a plan for addressing that debt, and make sure that it's not something that hinders you, but something that you're including in your financial fitness plan and addressing it in a timely fashion as you move forward. So let me kind of rewind us or reset us to what are the steps to financial fitness. There's a lot we covered here, and hopefully what I've given you is just a couple things to focus on, right? You don't have to do all this today. If you're just kind of starting out and getting a plan put together, focus on just a couple things. So we want to take stock of our situation. That's something you can do on your own right away. You can set some goals, take some time to create and manage a budget. That can take some time, right, to get into the process of creating it and knowing what your numbers are, and then managing it over time. Build into that budget or spending plan savings, both for the unexpected things as well as things in the future that you know you're going to have to take care of, and then be proactive with managing the debt that you have. So again, these are the 5 steps. We just have to keep working on these steps over time and being consistent with them. Some actions I want to give you. So again, there's a lot here. Let me just give you a few specific action steps that you can decide where you land with these. One, if you don't have a financial goal, define a financial goal today. What is it for you? A short-term goal for savings or paying down debt, something that's kind of keeping you up at night. Define that goal and start to put a plan together for that. Secondly, if you don't have a budget, create one. Get one down on paper, put it in a spreadsheet, whatever you need to do. Get that budget in place. Actively review and then manage that budget. So that's the next step there. If you have some numbers, start to have a plan for consistently reviewing and managing it. And if you've done all that, if you feel pretty confident, take some time to optimize your fitness and your goals, right? So then take a look at what your insurance coverage is, and take a look at your investments and your retirement and your other savings. Work with the resources through the credit union for those particular things. Meet with the appropriate professionals to optimize those things. Go a little bit further in the journey, because those are components too that we didn't even talk about today, but are certainly important to all of us as well. So if you feel pretty confident, start optimizing what you're doing and going a step further in your plan. And I want to leave you with some good advice, right? Some of this can be a little bit overwhelming, and so I don't want you to feel overwhelmed. I want you to feel encouraged with this process. So first, take it step by step. You don't have to overcomplicate it. Just start with, hey, let me take stock, let me set a goal, let me create a budget, and over time, these steps are just going to start to happen and be a little easier to move forward with. Secondly, keep learning through this series of webinars. There's a lot of opportunities to learn. Keep learning on your own as well with these topics and other topics. So engage with a periodical or a podcast or a book that encourages you with financial wellness or financial fitness. A lot of great opportunities. I need those encouragements myself, so I'm always consistently seeking out resources that could just give me that that energy again and that urgency to keep working towards my goals. And then third, enjoy the journey. Financial wellness, financial fitness doesn't have to be a burden. Just like physical fitness, bring a friend into the process. Have a little fun together. Find ways to do it in a fun way and not a boring or difficult or even a grinding way. Have fun with the process. Hopefully we've had a little bit of fun today talking about it, and you'll have fun with future opportunities as well. So hopefully that's some good advice just to keep you encouraged and moving along on this journey that you do have. With GreenPath, as I mentioned earlier, we're partnered with Park City Credit Union, so feel free to utilize us for a free and confidential budget review. Just call the toll-free number. Let us know you're a member. We can start with you to help build that budget, get a plan in place, give you a few action steps, encourage you along the journey. And check out all the resources from the credit union as well, whether it's different products that you could utilize or resources they have available in addition to GreenPath. With that, there are time for questions if there are any questions. And I want to thank you for the time today and wish you continued success on your financial wellness journey. So I'll throw it back to Lisa, and also if any questions come in, I'm happy to address those as well.
Thank you, Luke. There's always just so much great information that you share in your presentation, so thanks again for joining us today. So yes, we are at the Q&A. If you have a question you'd like to ask, feel free to put it in the chat box. Otherwise, if you want to come off, unmute yourself. If you could utilize that raise hand feature to just signal to us that you'd like to speak, that'd be great, and we'll give a few minutes to let those questions flow in. I wanted to thank you for your example about the costly fees. I thought that was very interesting. You know, when we hear about cutting back on things, I'm always hearing about the example of coffee, but, you know, when you started pointing those out, there are a lot of costly fees that we have in our life. I'll tell you the one that I resonated with a little bit is carryouts, and certainly I think during the pandemic I've been enjoying more carryouts and more takeouts.
Yeah, and I resonate with the children when I have three young kids, and you know, a lot of the things you buy are definitely needs, but I find there's a lot of wants we're paying for too, and I have to be careful sometimes not to overextend in that area. So yeah, when you look at it differently, it really does make a big difference.
Okay, we did have a question come into the chat box. Luke, do you want to take the question?
Yeah, what options are there for automated savings accounts versus traditional savings, thinking of things like an old Christmas Club program? So, yeah, what I typically do, and Lisa, you can speak to this too based on the different types of ways members can put things into accounts at the credit union. There are sometimes options for Christmas or holiday club savings or vacation savings, those types of things, or just separating things by name or by category within one account or putting them into separate accounts. So in my case, everything just kind of goes into one bucket, but I can identify for the different amounts how much is in each category that I'm saving for. But there could be, you know, different rates for things like a Christmas or holiday club or a vacation savings account, and I'll kind of ask you, Lisa, if Park City has those types of options for members.
Yeah, that's certainly, you know, if you want to have a dedicated account for something, we can work with you on. I know one of my coworkers, she got married a couple years ago, and she set up a dedicated wedding account, so, you know, they could help keep track of their, you know, figure out expenses and also make sure they had enough money put away to help plan for the wedding. So, yeah, definitely an option.
Yeah, and the key there is just knowing what you're saving for to start, and then there could be, you know, certain types of accounts that help fit the bill too while you're doing it.
All right, I think we'll give a couple minutes to see if there's any more questions that flow in. And this is kind of just a question I jotted down. This kind of goes with the previous question that we were just talking about. You know, if you're setting up an emergency fund, you know, money that you want to put away only for emergency purposes, is that something, if you have any recommendations, would you put that as its own account, you know, like its own emergency account, or do you say put it in your savings account but just don't touch the money unless you need it?
Yeah, so for me, I actually do separate it into a separate savings account. So I can mentally say, this is for a true emergency, for a job loss, for reduction in income, or pulling only from that fund. Whereas in the other savings accounts, it's the maintenance for the home, maintenance for the car. Those are things I can just draw from as they come up. But I also then have that second account just for the emergencies, and I know you're not touching it, Luke, unless there's nothing else to pull the money from. That's where it's going to come from. So that helps really separate the priority of how I spend those dollars when the opportunity is there to spend them.
Yeah, thank you for sharing that. We did get another question in the chat. Someone's asking, if you call in for a budget review, what information should we have in front of us?
Yeah, so here at GreenPath, we try to make it as easy as possible when someone calls. If you had nothing, we could take you through a budget review. As I mentioned during the session, we're very good at asking the right questions to find out what your normal spending is, what your income is. And it doesn't have to be perfect for a conversation with us. We like to just at least get as close as we can to start building a budget and action plan. But typically, what you need is just what your net income is for the household on a regular basis. So whether it's biweekly or monthly, just tell us what those amounts are and we can help you do the math if you need to. And then what are your normal monthly expenses? The housing, the utilities, the food, the personal care, household items, just kind of a general list of those particular things. And then we'll, prompt you to see if there's anything else that might be in there. But most of us know where we spend our money if we just think about it closely enough. And so just a list of some general expenses and your income is a good start. Or if you're able to log into your online banking while we're talking to you, sometimes you can just tell us what those other expenses are as well. So we can do it all on the fly. And but if you have it prepared ahead of time, it might be a little bit easier to chat through. And then we'll put all that together in a budget for you, evaluate it. Is there a surplus? Is there a deficit? What changes need to be made? Let's build an action plan. Let's get 4 or 5 different steps of things you should be doing based on the goals that you have. And then we send a full copy of that to everyone that completes it. So it's something for you to review and reference and keep with you and use as you move forward. And that's something we do for free for everybody, is that financial assessment.
Thank you for sharing that, Luke.
Yep.
All right. Well, I'm not seeing any other questions come through in the chat. And like Luke mentioned, we are a partner with GreenPath, so feel free, you can give them a call at that 1-877 number that's on the screen right now, and they'd be happy to chat with you more. All right, so I just want to thank everyone for attending today's Northwoods Financial Series session. Our next session will take place in March, so just stay tuned to the Park City website and our social media pages for more details. So thank you again for attending, and we hope you have a great rest of your day.
Take care, everybody.